Hello, everybody, and welcome to the AFAN webinar, Comfortably Disturbing. My name is Georgia Lane. I'm the Director of Marketing at AFAN, and I'd like to introduce you to my colleagues. We have over to my left, I'm not sure where he is on your screen, Paul Geisel, who's our founder and aged care specialist. Craig Ball, hey Paul. Craig Ball, who is our founder, director and estate planning specialist. And Ian McPherson, who's our founder, director and lending and finance specialist. So today is all about answering your questions. There's only weeks till Christmas. We're heading towards the end of the calendar year. And it's just been such an amazing year. Who could have thought that 2020 would be so bizarre? I mean, even from the financial services perspective, we've been through so many changes in our industry, and we're just about to head into the biggest change yet. So we really wanted to field some questions and answer some questions from you, from risk advisors and financial advisors, about how you're feeling about these changes, what decisions you're making. I guess our advice is and what we're finding. So we're going to go into that today. We're going to be answering some questions that we have received from you and from risk and financial advisors in the industry. Before we do, though, I wanted to just hand over to Craig for a moment, and I just wanted to share the screen to show you a bit of an update on what's happening with AFAN, where we are at the moment. So Craig, just over to you, if you wouldn't mind giving everybody a bit of an update on what the team looks like currently.
Thanks, Georgia. The timing's perfect because right behind me I have a construction site, and they just started the jackhammering. So apologies, guys, if you hear the noise in the background. David Baccinelli joined us some time. David decided not to do the FASEA exam, and obviously not to do the graduate diploma. So he has brought his business into AFAN, and David's been quite proactive actually, and we've had a number of interviews with David's clients, not only myself but also on the financial planning side. There'll be some aged care interviews, and David really sees the benefits of doing that because now his clients have all these other additional services open to them that he will actively manage. He'll just bring in the specialists to get the job done. Next to David on that screen is Mike Donoghue. Mike was actually my first BDM, Mercantile Mutual it was, back in 1996. That then became ING, and then it became OnePath. But Mike was a BDM for, I think, 20 or 25 years, and then he bought a risk book and he ran that for about 10 years. And I spoke to Mike about 2 years ago when we initially came up with the concept of AFAN. He decided to sell his practice about 12 months ago, and AFAN was still very much in its infancy. So we were a little bit too early for Mike. His retirement was a bit too early for us. But he reached out to us because, like Paul, he had retired. He'd made his financial plan, but not a personal plan. And he was sitting at home driving his kids crazy, and we saw that there was great value having Mike on the team. So we said, come and join us, mate. And he's been terrific. He's been helping with all the onboarding of advisors. We've got a number of advisors and planners that are in the process of coming into AFAN as we speak, and Mike is heavily involved in managing that. You guys would have seen obviously Celeste, who is the office manager from Succession Estate Planners. She's with AFAN as well, so she's assisting in the administration role. But we've been very fortunate to pick up Nancy Brandon. Nancy's got over 25 years of experience as a practice manager. And in fact, Nancy was the practice manager for Tony Rigby, who was a very, very experienced financial planner with AMP. And we tried to get Tony into AFAN right from day one, but he has a non-compete in his buy of last resort contract with AMP. So we couldn't get Tony in as a planner, but we were able to secure his practice manager. So she's working with the financial planners with AFAN as we speak. We are in the process of appointing our head of financial planning for Brisbane, and also on the Gold Coast. We have a financial planner on the Gold Coast, and we're talking with some senior planners at the moment who we're hoping will actually run the region on the Gold Coast for us. That's a very quick snapshot, but a lot has happened in the last couple of months.
It has. It's getting very exciting, and we've got some really wonderful team members coming on board, and we will reveal each and every one of them to you shortly. I guess maybe, Craig, you could explain to us the types of advisors, risk and financial advisors, that will fit with the AFAN model.
Yeah. Firstly, I think it'll be a lot of senior risk advisors that will come on board, those who have been around for 30 or so years, who don't want to do the FASEA exam, or perhaps will struggle successfully completing the FASEA exam. Now on that, before I forget, congratulations, Paul, on successfully completing the FASEA exam.
Thank you.
Yeah, well done. That's a relief. And look, as we said, it's a really difficult exam because the questions are very subjective, and I personally believe that it was designed to try and trick us up. Whether it was or not, I don't know. But when I was doing the exam, I just thought, this is just very subjective. So there will be a lot of really good risk advisors that aren't going to successfully complete that exam. So we basically got 12 months. If you fail in September of next year, it's all over, Red Rover. You won't get another opportunity to sit it. Okay, so we've got a 12-month window. So the older guys, older risk advisors who don't want to do FASEA or can't successfully complete FASEA, they should look at AFAN as an option, but also younger risk advisors, because I think running a practice today as a sole practitioner is becoming more and more difficult and more expensive. I know a lot of the licensees are saying to a number of practitioners who aren't achieving a certain level of revenue, the licensees have basically drawn a line in the sand and said, if you're not earning this amount, find a new home. And one fellow who's approached us this calendar year, paid 5.2% to his licensee. From the 1st of January, his split will be a 70-30 split. So his costs have increased sixfold, simply because he doesn't meet that revenue requirement from the licensee. Now, that's what I'm saying about the increased cost, the increased compliance burden. It's becoming more and more difficult. So we believe that there's a home for the younger practitioner as well that wants to continue giving advice, but isn't real happy about their costs going up by 5 or 6 times. So it's a bit of a mix, Georgia. It's not a one shoe size fits all. I think there's an opportunity for all different age groups, all different levels of expertise. The big thing with AFAN is, though, that you've got to meet our culture, guys. We're only interested in the advisors and planners who have a long history of doing the right thing for their clients. For those, and we know who they are, for those who have a history of continually churning policies, unfortunately, they're not going to get a sniff at AFAN. This is about getting great outcomes for clients. And we're going to be very, very protective of our brand with that.
So true. And all of the advisors that we've been talking to and who are coming on board are exactly that. They're great people. Some of them are in the audience now, I can see. I can also see there are a couple of the advisors who have asked some questions that we will be answering today. So I'll just start off with those questions. And for everybody else, if you'd like to ask a question, and if you'd even like to have a bit of a chat with us, I can unmute you. Just type in the Q&A and I'll see your question, and then we can head down that path. But we'll start off with, I can see Paul Herring is there. I'm going to start off with his question, which I think any of you can answer, but I'll probably direct it at you, Craig, in the first instance, and then Ian and Paul, you can add to it. So from Paul Herring, what are advisors' options over the next couple of years? Frankly, for life risk specialists, I don't think there is one per se. Unless linked with a financial planner or dealing with high net worth clients, the regulators have made it impossible to operate within all the factors we know about getting in the way. FASEA, compliance, best interest, etc., which leaves most of us with only about 15% of our remaining time to engage with clients. So the question, of course, is what are the advisor's options over the next couple of years?
Great question, Paul, and welcome, mate. Thanks for that question. There's essentially a couple of options. Number one is to get out. For the better advisors, that's not a great option, I'm afraid. It's not a great option for them personally. It's not a great option for our industry, and it's not a great option for the clients that have been relying on your valuable service. So that to me, that's not an option. So we've got to be a little bit creative. Number two is to successfully complete the FASEA exam. I would definitely recommend that to everyone who's going through this. It is difficult, but we know that the licensees are trying very hard to give assistance along the way. So definitely give it a crack. If you complete the FASEA exam successfully, then you've got another 4-year window to do your graduate diploma. Well, actually, if you can complete it sooner rather than later, you've got 5 years. But just remember, when you start your graduate diploma, even though we have until 2026, the institution that you do your graduate diploma through will only allow you 4 years to complete that diploma. You're not going to be able to do it over 5 years. You have to do it over 4. So that's option number two. Option number three is perhaps to bring in someone younger who does have the qualifications, that can learn from you, that can potentially be your succession plan. That's an option. I think that's a high risk option. The reason being is that what do you do if that licensed younger advisor goes on leave or gets sick? Or decides to move away from your area, or decides that they don't like working with you anymore. What do you do then? Then you're back to square one. Your business comes to a grinding halt. And if they do leave and they remain in the area, have you got a strong enough contractual, legally binding agreement that can ensure that they can't poach your clients? I see that there's a lot of risk with that particular option, but I know that a number of risk advisors are seriously going down that path. Option number 4 is the general advice model. A couple of businesses have popped up. That is an option. I know of a couple of risk advisors who are seriously considering that option. Personally, I wouldn't touch that with a 10-foot barge pole. I think it's a cop-out. And I think we will see a huge raft of litigation coming down that path to those that are basically looking for shortcuts. To me, that's a short-term solution. It's a short-term solution where someone can continue to give advice for a very short period of time, but they will see a very early exit, and clients will be aware of it as well. Clients aren't stupid, that they want advice. Some of them don't like paying for it, but they want advice. And I think the general advice model is an absolute cop-out. Option number 5 is a group like AFAN. AFAN is essentially a co-op, guys. It's the bringing together of like-minded individuals who have different areas of specialisation, but who are licensed. And under those areas of specialisations, we have a range of degree qualified practitioners. And so being a risk advisor who doesn't have the education but wants to continue, you can simply attach your business to a group like AFAN. You can continue to do everything that you're currently doing other than saying, I recommend. You can make factual statements. In fact, David, who has joined us, he sits in on all the client meetings. And he gives a lot of input into the client meetings. And he project manages the implementation of the strategies, and he will project manage the claims. He's just not saying I recommend, and he's not putting his name on an SOA. That's it. But the key is the relationship. David, for example, has relationships with these clients that go back 10, 15, 20 years. And you can't buy that. If David just left and we purchased his book of business, we don't have that same relationship. They don't know us from a bar of soap. So it would take us years and years to build that loyalty and build that trust. And, you can't buy that. And that's why an organisation like AFAN will only be successful by keeping the relationship in place between the risk advisor and his or her clients.
Craig, you didn't mention selling your business. Ian or Paul, did you have any views on, what the options are in the industry if an advisor is looking to sell the business? Obviously there's a lot of advisors out there who are heading down the path of having to choose by December next year.
Yeah, we've sort of been talking about this for a couple of years now, I would imagine, ever since it sort of first raised its head. But the problem with trying to sell your book now is the multiple that originally was there is gone. And number two, there's so many people who would like to select that option and try and get out that there aren't enough buyers for it. It's simple market dynamics. I believe it's going to get harder and harder and harder to sell your book on that basis. And there's qualified people sitting there waiting to collect up as much business as they can for as little as they can. And I think it's obviously a sad situation for us to be in, but let's face the reality of it. It's a difficult path to go down if that's the only option you're going to choose. I think Craig's articulated, how many did you get to? 6 or 7 different options out there. 5, right? Oh, yeah. Yesterday afternoon, I thought there was only 4. He's found another one somewhere. But I agree that, that's a difficult path to go down to sell your book, to try and get any real value out of it. It certainly isn't going to be commensurate with the effort that you put in over the last 10, 15, 20 years, what you're going to sell it for. It's kind of like a pretty weak exit. And all the value is in those clients. And that's what our whole organisation's about, is continuing to empower the advisor to stay in the relationship with the clients and then look at the other things that they can do within the group.
Yeah. Well, we have, thank you, Ian and Craig, I think that answers that question well. Paul, if you had any other further questions, just type in the Q&A and we can unmute you. We've got another question from Louis Scapato, who we've actually met with, and thank you, Louis, for your question. Again, if you wanted to have a chat with us, just let us know in the Q&A. So the question from Louis: how can I remain as an advisor if I don't have a uni degree? I began as an advisor on the 5th of September 1975 with AMP. He's not with AMP now. I have until June 2021 to decide if I don't want to do the FASEA exam. If I don't, then have a career from 31st of December 2021. So if I don't do the exam, how do I continue to service my client base after December 21? This is just the part I don't understand. I know we answered this to some degree in the question previously, but I think Louis got some specific areas that we can address.
Well, Louis, the short answer is you can't be an advisor if you don't pass the FASEA exam. You can't give any advice at all. And the gate is shut, the horse is bolted on that one, and it's sad that so many great advisors are being affected. But one thing that I've learned is that there's no point getting angry over things we can't control. We can't control this. And what I've learned to do over the last number of years is step away from the madding crowd, as I call it. Get away from the lemmings who are heading towards the edge of the cliff and start to think creatively. So no, you can't advise unless you successfully complete the FASEA exam. As I said in my opening comments, give it a crack. You try the exam. You'll need to do some serious study for it. It is difficult, and I know personally that the older we get, the harder it is to retain information. I had to read things 3, 4, 5 times over before I retained it. So I know it is difficult, but I think give it a crack. You've got nothing to lose and everything to gain. It's going to give you a couple of more years. But if you don't complete it, then you've got to think of other options. And then Ian and I have just explained the options. So you can continue to have the relationship with your clients. You can continue to service them. You can continue to make factual statements to them about their portfolios, about how their insurance contracts work. You just can't say, I recommend you do this over that, or I recommend this company over that company. And you certainly can't put your name on an advice document. Okay, so that's reality. You need to think about what's the best option for you. If the best option is to sell, then, put it onto the market and get some feelers for it. See, you might get a reasonable value. If you don't want to leave the industry, then you've got to think of another option. Option number one could be an organisation like AFAN, but we may not be right for you. And you may not be right for us. We don't know that. But, I haven't seen any other reasonable business options coming up on the horizon. I've met you, and I can't see you going down the general advice model. I don't think that's in your DNA. But that's it, mate. They're the only options you've got. So you can, like David is currently doing in AFAN now, you can continue to maintain the relationship. And the thing is that when you look around the screen and you've got people like Paul and Ian, they're services that most risk advisors don't have access to. The insurance companies program us to sell product. They make money when we sell insurance products. What we're saying is that your client base, my client base, they need other services other than insurance products. A lot of them have elderly parents. A lot of them have kids who are now, wanting to buy homes. There's a lot of other services that the clients need and their family unit needs. And what we're saying to the risk advisors is take the blinkers off, guys. Let's stop looking at trying to sell them a product and let's see what their entire family needs. And then you be the project manager. You introduce Paul, you introduce Ian, you introduce the financial planning team. If they need cash flow management, there's a number of general insurance. We've just done a joint, we've just gone into an arrangement with Lee Insurance Brokers on the Gold Coast to provide all the general insurance solutions for AFAN clients. So once again, there are opportunities for you to project manage that, to introduce those services to your clients. And in fact, if you've been around for 40 odd years, we want you for another 20, mate. 40 years of developing trust with those clients. Even if you sell, whoever buys your book, they're not going to have that trust. The clients, they'll start looking elsewhere. They might dip their toe in the water, but if they're not happy, they'll go elsewhere. You can't buy it. It's so valuable.
Just a comment back more so from Paul again, Craig. The cost of doing FASEA when I'm unlikely to use the range of what it covers is unviable. Craig's fifth point is the most likely journey to travel down, but I want to quit anyway. To me, it's over. However, quitting the business is about as difficult as leaving the Hotel California.
Love the Eagles.
Just on that, I guess, maybe some explanation. This might be a question from Ian. Can you just explain, how the licensing arrangement works? We're talking about advisors coming across to AFAN and just not saying I recommend. It's a bit confusing as to what the difference is, for example, between AFAN and Synchron, the licensee. Can you explain this, Ian?
I can explain it to a certain extent. Craig's probably the technical advisor on that one, but we're a corporate authorised representative underneath Synchron's licence. So we are, as I said, a corporate that you can join. You just simply cannot provide advice to your clients, but we're licensed and we're scrutinised and every other thing that happens. But our, I think Craig touched on it earlier as well, the advisor that has a 5% fee split at the moment that's rising to 30. that's a pretty hefty whack for an individual. We're more a cooperative, and we bring everyone in under our one corporate authorised representative licence, and we provide the recommendations through the licensed individuals, depending on what the discipline happens to be. For me, it's underneath my credit licence. If we're doing anything in the consumer residential space, commercial or asset finance, they're all sitting underneath that one credit licence. But for the individuals joining us, if you don't have your own licensing arrangements, it's a perfect opportunity to, well, hitch your wagon to the business.
And so that sort of leads into another question about if you are a risk advisor, and I'll get to you in a second, Paul, too, because I'd like to understand from an aged care perspective of how it works. But the question is that if you've only ever been a risk advisor during your career, how do you suddenly offer these other services?
Well, the mantra we have is take the blinkers off. Like, I think it's manifestly evident that the insurance companies have got you doing one thing because that's how they want you to operate. I don't see them supporting the industry now that the regulations have changed and trying to get you through exams or help you in any other way. If someone can tell me that they are out there doing that, I'd be interested to know. But I think it's simply serving their purpose. And serving their purpose means only selling what they have to the clients. But as you know, every single individual with a family or a responsibility or a job has a multitude of things that they require, and they will get them somewhere. If it's not through our organisation, it'll be somewhere else. So they'll encounter need for aged care advice at some point. If they've got a complex family situation, they'll need succession and estate planning. Most families in this country buy their residential property through borrowing money from a financial institution, so they need those. And it's how those things interact with one another, which is also important, and the way we look at things. Do you have too much debt? We don't want to write any more for you if you've got too much debt. Or have you not accessed something like, using the tax advantages for having an investment property? That's the other side of the coin. That's just on the financing side, but you need to look at all aspects of the client. And to do that, like everyone that a risk advisor has some other need. Just haven't asked the question. And that's all we're asking them to do. Interact with the client, stay within that relationship, ask more questions, and see if someone from our team can assist them.
I think just backing up on what Ian said there, Georgia, one of the benefits of having so many specialists in the one group is one thing that risk advisors have experienced this year is clients getting quite substantial premium increases. And so we've been very busy trying to make sure that clients can keep their insurance policies on the books. They can continue to afford them. And so what that normally means is having to reduce sums insured is the most obvious approach. However, because in the past, risk advisors don't tend to ask questions about, what is someone paying on their mortgage? Which institution are they through? What are their monthly repayments? What's the interest rate? Even if we do take that information, we don't do anything with it. It sits in the client data form and gets filed away. But having access to Ian's department, when a client is experiencing increased premiums and can no longer afford it, I can then take that file to Ian and say, here's the details of the family's mortgage repayments. This is the institution that they're with. This is how much they're paying. Is there an opportunity to do some refinancing here and save this family a few $1,000s so that they're not exposed by lowering their sums insured?
Yeah, well, we've taken it a step further. Where are the kids? Have they all grown up? They're all gone. Do you need that big house any longer? I mean, it's not all about writing another loan. Sometimes it can be about, well, do you need to downsize? And where are you going on the journey through life? That's what it's all about. That's why you stay with these clients for so long. And at times, the requirement for life insurance and TPD over time diminishes. And so other requirements become more prominent, and we just start switching from one thing to another. but you have the opportunity to stay in the relationship with the client all the way through.
That's a good lead in, I think, to a practical example. And I've got another two questions in a moment from Steve Grice and Paul Herring. But I wanted to use a bit of a practical example for you, Paul. Talking about, for example, if a risk advisor, who has a fantastic relationship with his clients and has looked after them very well, making sure they have all the right insurances in place. As they are getting older, those clients, they will have elderly parents who will have needs to be looking into residential aged care. In current environment, they might not be able to help that client. However, under AFAN, we can, facilitate an introduction to you. Can you just describe how that would work?
Yeah, look, listening, there's a number of things I could respond to just listening to the questions that were asked. But I think the main thing is you can't be all things to all people. In the industry that we're in, it's our duty of care to identify what the needs are both now and in the future of your clients and their parents. So whether you're a risk advisor or a specialist in self-managed super fund or estate planning, aged care, whatever, what we need to do is start up alliances with the other professions that link into what we do. And as I said, as Craig said, and I think Ian said, ask the question. And some of the questions you need to ask are very simple questions. And when it comes to the aged care side of things, you would all have clients in their mid-40s and 50s. More than likely, they're going to have parents or grandparents that will need care down the track. And it is just simply asking that question. And the disturb your thinking question that I always ask advisors in my space to ask is, if your client does have elderly parents or grandparents, ask the question, are they likely to have an impact on your retirement when you retire? And usually that does stump them and they say, how do you mean? And I've said it before, there's sort of four things where the parents could impact on your retirement or your client's retirement. It could be financially. Maybe you have to contribute to their care down the track, whether that's care at home or placing them into an aged care home. It might be physically. You might have to live close to them and every couple of days go around and check on them, mow the lawn, all those sorts of things. And again, geographically, if they live in Tasmania and you live in Brisbane, are they going to move to you or are you going to move to them? And the fourth one is legally. While they've got sound mind or mental capacity, I should say, just make sure that their wills are done, their enduring powers of attorney are done, advance health directives, all those sorts of things are kept in order. And you'll find it's going to make it easier on the family. But I think, look, just one other thing I wanted to say to the two guys that talked about the FASEA exam, don't give up on it. I mean, I struggled. I was, my hair and beard was jet black at the beginning of the year, and look what it's done to me. But anyway, I think what you've got to do is, what do you love doing? And if you love looking after your clients, you've really got the two options. You can have a shot at the FASEA exam and continue to do it in your own right, and or come across to us at AFAN. You can still continue to look after your clients. As Craig has said, you just can't give the advice, but there's the business can give the advice and you handle the relationship. But don't give up on the exam. I'd give it a crack, and the reason I did it was I don't want anyone telling me when I should pull up stumps. I'm semi-retired, but I would like the opportunity to work for another 1 year, 2 years, 4 years, 10 years. And if it happens to be 10 years, I'll well and truly be entrenched in AFAN and hopefully sharing what I know with the younger folk coming through. So, yeah, guys, don't give up. And if I can help you with some questions on the exam as it's fairly current in my mind, happy to do that.
Actually, on that point, Paul, there's a question that's just come through from Paul Herring, which I think you'd be well suited to answer. Because I know that one of the things you love doing and one of the things that I guess attracted you to AFAN is being able to continue to share your knowledge and train the young folk, as you say.
Yes.
So Paul Herring asks the question, in years gone by, life officers provided excellent sales training. That's all gone now, but ours is still a people business. Therefore, sales training is still needed. To me, this seems a niche which hasn't been addressed. Do you see AFAN as addressing that, especially for young advisors?
Yes, I do. Probably not initially formally, but purely by the people that's involved in AFAN. So Mike and myself and Craig and well, all of us. There's a lot of experience and time that we've put into this industry over a very long time. So the formal training that will come. There's no doubt about it. But initially, it would be more sitting with people like myself and understanding your business and you understanding what I do, doing joint interviews together. And I think the training there would happen on the job. In terms of dealing with people, you wouldn't have your own business if you didn't have those interpersonal skills. But there are things that I'm sure that I could teach you and you could teach me. So it is a matter of working together initially and doing joint interviews and bouncing off each other.
So I'll just add to that, and then I'll get Craig to make a comment. So Paul, we have, as you know, we've got these webinars. We've got an extensive library of education and content that we're just building all the time on our platform. We will go back to live events eventually. That's what we were going to do. Our first one was supposed to be in March, but we've shifted to webinars, which has been fantastic. It's a great way to train people and share our knowledge. And part of the process when a risk advisor comes on board is that we do require that they meet with us and make sure that their best interests are met. And, Craig, you can probably explain that process a little bit more. So it's a bit of a combination of, this type of training to help with them with their sales training. And it's a bit of a combination also of as Paul said, the meetings face to face and just learning as they see the advisors operate and sell. Craig, did you want to add to that?
Yeah, look, Paul Herring's comment was really valid. I came through the AMP system and I always held them in very, very high regard in relation to their sales and interpersonal skills training. They really were first class. But we don't see that anymore. And that's so important. We've got a lot of young people who have come into the industry who are technically extremely capable, but really struggle with those soft skills or those interpersonal skills. And with regards to training, that's something that we have already implemented with AFAN. We have an induction day for all of our new people who join us. But with the training, the three gentlemen here and yourself, Georgia, have a lot of experience in that area, but so too do a lot of the older advisors who are looking at AFAN or looking at getting out. And even if someone joins AFAN today and decides to retire in 2 years or 5 years, they will always be invited back to come in and pass on the skills, even in their retirement years. As I mentioned at a number of webinars ago, Arthur Tang came up with the idea for the community, which we're very, very supportive of that idea, and David's going to help us with the building of that idea. But the basic premise of the AFAN community is, number one, is to provide that environment for those who are pre or post-retirement to remain attached to us, remain attached to the industry, and also for them to feel like they belong, to have purpose. If you think about it, when we retire from the industry, someone buys our book and then that's it. There's not much of a farewell. You don't even get a gold watch or a cheap gold watch. And we want to do something about that. And part of the AFAN community is about giving recognition to those who have spent 30 or 40 years of their lives creating a great environment for their clients and a great service, but recognising them publicly and then keeping them attached to the business, not only so that they can feel like they're a part of the family still, but so we can still retain all that knowledge. We want that knowledge and experience passed on to the younger people. If we don't retain it, we lose it.
So important.
You've got someone who's got 30 years of experience, like Louis. If Louis, if you leave the industry's lost all of your experience, all of your knowledge. all of your knowledge, it's gone.
Mm.
But if it's held within the AFAN family and you get the opportunity, or we get the opportunity, for you to share your knowledge with younger advisors who are red raw, 2 or 3 years in the industry, what a great opportunity for the younger people to listen to someone who's had 30 or 40 years. So the training within AFAN is not only for those who are still working in the industry, it's for those who are happy to share their knowledge post-retirement. We want it, we need it, the industry needs it, we can't afford to lose it. And the young guys who are technically capable, but don't have those interpersonal skills, they definitely need it.
But also, I think there's just one other thing, and Paul touched on it a little earlier, and I think I saw a question from someone as well. You can still remain licensed and join AFAN. You can go through the whole process if you want and still become part of our community. Instead of outsourcing the other things that you identify in other services, get them done in-house. Tighten the relationship up. It just adds a better experience for the client and a more seamless experience for the client, rather than sending all those services externally or not addressing them at all yourself and just sticking to your knitting. So, there's a multitude of opportunities and ways you can join the group.
Yeah, so that question was from Steve Grice, which I'll just ask now. It's a two-part question. So first of all, he says, "Hi guys and Georgia, great session." Thank you, Steve. Yeah, if a risk advisor was to join AFAN and brings a book of business over and they have passed FASEA, I assume they can still operate, but under AFAN? That's the first part of the question.
The answer is yes.
Yes, great. And the second part, which I guess I can answer, does AFAN supply marketing support to you so you can promote the other services available through AFAN, such as aged care, lending, general insurance, etc.? So yes, as Director of Marketing, I can tell you we absolutely do. So when we set up AFAN, the official website, communication, social platforms and everything early this year, it's been very advisor focused. But we're just in the process. We've created the content calendar to start going consumer focused from early next year. So what we'll be doing is communicating on an ongoing basis on various ways, because people like to consume content and education and tips in various ways. There'll be things like this, webinars, there'll be events, there'll be articles, there'll be all sorts of things that will help your clients understand what other areas we can help them with. So, for example, as a risk advisor, your clients will then have access to people who can answer questions for them or solve problems for them. And I think, that the type of client that we're really looking after are people like ourselves. We're mature people who have busy lives and they're becoming more complex and our needs are changing. So while many of you have been looking after clients from a risk perspective, risk is perhaps not, the most important thing anymore as we get older. And, with families changing, people getting older, things becoming more complicated, they're wanting to get access to other things. And so, yes, they will have access to a marketing machine that will continually answer those questions for them and give them an option to then deal with one of our specialists in that area. And then from a risk perspective, as a risk advisor, you will benefit by getting a portion of that income that you would never have had access to before. So yes, Steve, thank you for that question. I hope that answers it for you. We're probably running out of time now. It's 11:15. So is there anything else, Paul, Ian or Craig, that you particularly wanted to address before we go?
I think, Georgia, just touching on your point, the marketing is so important. And once again, it comes back to what I was talking about before. When you're a sole practitioner, I know that a lot of practitioners, they give the advice, they prepare the documents, they take the administration calls from the clients and change the bank accounts. They do everything, right? So even when you look at websites of advisors who are sole practitioners, you can see that they've had a crack at doing it, and I'm one of them, but we don't do it well because we don't have time. You don't have the time or the expertise or the money to do marketing well. But since getting yourself on board as our director of marketing and just handing all that to you, you're right, it physically and literally is a machine that is continuous 24/7. And when I look at everything that's going on LinkedIn, on Facebook, with the emails, it's constant. And I know that it's continually driving and getting the message out, mainly to the risk advisors now, but as you said, next year to the consumers. And it'll be 24/7. I think part of the process is in educating the clients to say, guys, this is what you're going to receive. You're not obliged to take any of the services, and you'll never be pressured to take any of the services, but they're there if you need it. We're going to send you constant information, bits of educational material that we hope you'll find will be useful at some stage. If you don't want it, let us know and you can unsubscribe. But the information on our website is available to all consumers around the country for free. It's available to all advisors around the country for free. This is about sharing. And when all of that's happening in the background, I know my clients are going to be receiving information about what Ian does. I know my clients are going to be receiving information about what Paul does. I don't have time to physically have that conversation with every single one of them, but it's constant. And it's that, all those little touch points, a few times a month, touch points. This is what we do. If you need help here, if you need access there, if you get this question here, and the little, 15, 20-second grabs that the guys do on the videos, just talking about sometimes difficult conversations we have to have with our children or our parents. How do we address that? That's so helpful. And that's happening all the time in the background with this organisation. As a sole practitioner for the last 25 years, that didn't happen in my business, in any of my businesses. But now it's happening all the time. It's so powerful. I love it.
Yeah, the part of great marketing and branding is setting up that consistent look and linking it with the person that they trust, which is you, the risk advisor. And when, something starts to keep them awake at night, your clients, such as one of their parents or they're both parents, they're really, a bit worried about them. What do I do? How do I start the conversation about aged care? Or, my children want to borrow money to buy a house. Where do I go? They'll start noticing the things that we're putting out that answer those questions, and they'll trust it because it will be under the same branding that's linked with you. So it's not about shoving things down their throat at all. It's just about answering questions, and it's about you not missing opportunities to help your clients so they go elsewhere. So that's what the marketing's all about. Sorry,
Georgia, just one thing. I think it's being a sole practitioner, there's a certain amount of pride in what you do and what you've created and how you get that out to the market. And we recognise that. And we recognise it from the very grassroots level, because I've done it, Craig's done it. I think Paul's had a go at doing, marketing for himself through websites as well. It's very difficult if you're the sole person responsible for everything. And given the amount of changes now, the regulatory requirements and the upping of fees and the lowering of the upping of premiums as well for risk, it's going to get harder and harder and harder.
So true.
Use someone who's an exceptionally good professional at it, like yourself.
Thank you, Ian. I'd like to hear from somebody who's actually been through this, and David Baccinelli's just raised his hand, so I'm going to allow him to talk. David, did you want to ask a question or make a comment about your experience, feel more comfortable part of a team and access all of these services? Are you there, David?
Yeah, absolutely. Now, I hope you can hear me. I have very poor internet on our home hobby farm here. Yeah, thank you to all of you, Georgia and Ian, Paul, Craig. I think, firstly, for me, I agree, AFAN is a community. It's a co-op. But I think importantly, it's a home. It's coming on 20 years, part of a dealer group, same dealer group for 20 years. And realistically, I think I've always felt like a number. If I've really performed, I've, had the pat on the back maybe, but never really felt much more. But I actually feel like I'm home with this community in this family. So I feel respected as a person, and I can continue to do my passion. My passions have always, in the last 20 years, been helping people. And I think helping to serve people, to better their lives. And I've had that opportunity, thankfully, as a risk advisor. And the thought of hanging that up is a pretty sad moment. To continue and to be there for my clients and greet them and hug them, because we've built such a beautiful relationship, and to continue to hold their hand on their journey through life just fills me with joy. And the big thing about it is I don't have to meet any of the beeps that we've got to do out there with everything that they put up against us to really stop us from doing what we want to do and helping people. And I've said it many times, we're surgeons. And I believe we save lives. We help people. We bring them peace and security to their life, and we have a great journey with them, and we become part of their life. So to throw that away 20, 40 years, I mean, why would you do that? I'd rather be in a box. I've done stuff that I've loved for so long. So the opportunity to continue to do that just fills me with joy. And the flip side of that is, because I don't have to do all that regulatory stuff, I can actually build on other passions in my life. So I've opened up so many new doors that I'm loving it. And I can really do many things now and continue to do what I love in insurance space, but bring other things into my life as well. So it's an absolute win-win. I love it.
Thank you, David. And when you came to us, you had to make some decisions, and it would have caused a lot of stress for you and your family. How do you and your family feel now with a bit more certainty in your future?
Oh, geez, I think my wife is totally relieved. I think she got fed up with hearing my moaning and groaning, and she just say, look, why don't you just find something else, But so totally, I think she's really on board, and she can see that I'm happy doing what I'm doing, and that for her, that's just a bonus. That's just what it's about. So how many times do you hear people and they moan and groan about what they're doing in life? I mean, we're here for a short time, we've got to do what we love, So if you love what you do, why stop?
So true. Thank you, David. And we love having you on board as part of our community. So thank you for joining. Well, I think we are definitely out of time now. I just wanted to highlight that in another 2 weeks, as normal, we have another webinar coming up. What we're going to be doing, so it's Thursday the 15th of October, as normal on Zoom at 10 a.m. So just save that date. We're going to be looking at getting the house in order. As we talked about today, 1st of October, so only 3 months for the end of the year. What are some of the things that we can do as business people, as people in the financial services industry, even from a marketing perspective, what we can consider to plan to get done before the end of the year, and then start thinking about next year. So if you've got anything that you'd like us to specifically cover, please email us or contact us. We'd be happy to hear from you. Otherwise, thank you very much. Thank you guys for joining us, and thank you for all the advisors who have joined us and who have also asked questions. We really appreciate you engaging with us. Have a great day, everyone.
Thanks, guys.
Good work, Georgia.
Thanks very much.
Bye.
Thank you.